Let's get back to today's session. To lead the discussion this morning, this afternoon, this evening, wherever you've dialed in from, it is my pleasure to introduce you to Payal Patel.
Thanks so much, JP. Welcome, everyone. Good morning, good afternoon, and good evening, wherever you're dialing in from. I guess the beauty of moving to this virtual setup is that we've been able to draw a global audience, all of whom are looking to learn about financial crime, which is great because we truly believe that knowledge sharing really empowers us all and is a key part of preventing financial crime. This session focuses on building and scaling a FinCrime program in Asia. And for this topic, I couldn't have a better panel of experts, all of whom have in-depth expertise in the FinCrime space in this region, and also work at organizations that are really looking to approach anti-financial crime in new and innovative ways that not only mitigate risk exposure, but also enables business. And with these businesses in particular, Grab, TransferWise, Stripe, business is scaling at a rapid pace. As with all the sessions, we would like to ensure that this session is as interactive as possible. So please do make use of the chat box function to ask all your questions, and we will allocate time at the end to go through as many as we can. So before we get started, I would like to hand over to my panel to introduce themselves. So Jen, I can see your picture first, so we'll start with you.
Thanks, Payal, and thanks for having me on this FFE panel. My name is Surgeon. Hi, everyone. And I lead the compliance and government relations function within the Grab Financial Group. The Grab Financial Group has payment verticals ranging from e-wallets, so the GrabPay product that some of you will be familiar with if you live in sort of the ASEAN region, but a couple of other verticals as well, ranging from invest to lending, to a number of other insurance, for example, to a number of other businesses which we haven't actually gone public with yet. So compliance is one of the hats that I wear. I wear several hats internally, but for the purposes of this panel, I'll be sharing from a compliance perspective. Over to you, Payal.
Great, thank you so much. And I'm sure a lot of people that have dialed in are aware, but for those that aren't, Grab was awarded digital banking license, or at least it was formally announced this week. So congratulations to you and the team. And I'm sure there's plenty of exciting work being done and in the pipeline. So a really exciting time over at Grab, I'm sure. Michelle.
Thanks, Payal. Hi, everyone. I'm Michelle. I work at Stripe. I lead the financial crimes team for our APAC region. APAC for us means the whole of Asia as well as Oceania. And for those who are unfamiliar with Stripe, we are a tech company that's building the financial infrastructure of the internet. We started out as a company that helped merchants accept payments online, primarily credit cards, but our portfolio has expanded much beyond that, and we now have a lot of other products which help companies set up their online business and make it as frictionless as possible for them.
Thanks, Michelle. And last but by no means least, Genevieve.
Hi there, I'm Jen. I head up compliance for Asia Pacific at TransferWise, and I'm based in Singapore. TransferWise is a mission-driven company. Our mission is money without borders, to be instant, convenient, transparent, and eventually free. Thanks, Payal.
Thank you so much. So to start this discussion, I'd really like to set the FinCrime stage here in Asia. So we all work in compliance and financial crime. And there's obviously a lot of regulatory focus on financial crime, but I really want to understand from your perspective, do we see financial crime in this region as being a material threat, a real area of focus, or do we just see it as hyperbole? Genevieve, maybe I'll start with you.
Absolutely. There's material financial crime exposure in Asia. I think the financial crime in this part of the world is diverse. It's constantly changing, and perhaps like a rare animal, it's waiting to be discovered.
Michelle?
Certainly, and it couldn't be more true, especially with this year with COVID. If legitimate businesses are not the only ones to go digital and go online. Bad actors and criminals are also out there trying to make use of what is possible on the internet. And so we would certainly come across it during our daily work.
Surgeon, anything to add?
I mean, this might sound a little bit trite. So financial crime is definitely everywhere. And I think Southeast Asia in particular, and the Asia Pacific region, has very, very talented criminals in this space. But I think that your different institutions' experience with financial crime will depend really on the underlying products. I understand, of course, that for TransferWise, if you are focused on the remittance space, there will be a certain kind of financial crime that will draw. Similarly for Stripe, if you're focusing on payments processing for cards, there will be another kind of financial crime that will be drawn to that. And similarly for myself in the e-wallet space, where there's interactions with dimensions of, for example, card top-ups or even dimensions of remittance, then there will be other elements of financial crime as well. So I think it really does speak to what kind of product you have, and that will determine your experience with it.
Thanks for those responses. So over this year, we've seen increased regulatory focus on the use of technology in the AML space. So recently, HKMA, for example, have issued guidelines and notices around how to use technology in the FinCrime space, primarily focused on banks, but what good looks like, how to balance quantitative and qualitative analysis, etc. I wanted to understand a bit more how you use technology in the AML space within your organization and how that has changed over this year. Surgeon, maybe we could start with you.
Sure. So for us, all our onboarding of customers takes place over the app, right? And so by definition, that means that all our tools for AML really are technological tools, because there isn't any face-to-face onboarding for a sort of a FinTech business like ourselves, right? And I think that's true also of Genevieve's business as well. So I think that means that the technology focuses, I think, in two main areas. One would be in the onboarding area. And within the onboarding area, you can break that down into things like, for example, the use of digital identification, where that is available. Both Singapore and Thailand have versions of digital ID that are official. You also see it in the ID and verification space, for example, in your sponsor Jumio, right? You also use technology in the transaction monitoring space, right? So transaction monitoring wise, people refer to, for example, the use of data analytics, but that's actually very sort of simple rule-based systems that you use to monitor transactions. You can also move into sort of the DS, which is the data science elements of transaction monitoring as well, such as using artificial intelligence. And sorry, I skipped in onboarding. I also skipped the use of name screening technology as well. So there's obviously a range of name screening providers out there. And the biggest names, like Refinitiv, for example, they do certainly innovate in various ways to continue to come up with products that are relevant for financial institutions. So I think we look at basically all of these parts or elements of AML program, and we very carefully see where we can use technology. Some of it obviously developed by ourselves and some of it with vendors.
Michelle.
I would just echo what Surgeon said. I think everything he said there rings true probably for all of us in terms of how technology is used in the financial crimes program, given that we're all technology first companies.
Yes.
I think what might be interesting for me to touch on is in terms of what we've done differently, or what has been interesting for 2020 is the development of requirements from regulators that we'd be using more technology, especially in the eKYC space. We've seen it with the Payment Services Act in Singapore on impersonation risk.
Yes.
So that's relatively new, and haven't seen that come across anywhere else before in other jurisdictions. Video KYC, another mandatory requirement coming from our India regulator, RBI. So once I feel when the regulators start requiring or asking of us to experiment more with technology or giving us a very set way of doing onboarding, then we're having to adapt and think about how do we adjust our tooling to respond to those asks, and even how can we gain a competitive advantage in the onboarding space. And so I think I can share this in the chat box. Stripe has been experimenting and developing our own identity API product that I can put in the chat here. It's an
super interesting.
Yeah, it's an invite-only stage at the moment, and it's probably not that dissimilar to other products that you see in the identity space market, but this is really just the beginning for us in terms of how we're thinking about identity and how do we use it to solve the pain points of our users and not just solve it for ourselves. So watch this space. We'll probably have more coming down the pipeline.
And how receptive have regulators been to sort of your approach to using technology in this space? So obviously where you're looking to reduce the amount of friction, but also mitigate risk exposure in new ways that might not neatly fit within regulatory requirements, etc. How receptive have they been to this dialogue? And I guess, have they managed, do you feel like they've managed to strike a sort of tech neutral standpoint?
I think given that it's something which is still very much in flux and developing, and the regulators are looking to see how well can companies adapt to these new asks, my sense is that they're still fairly flexible and willing to see what offerings we would offer them as alternative solutions. They're very much open to hearing feedback from the industry, and not necessarily stating that there must be only one path, for example, my info in Singapore. But it's definitely a two-way conversation in getting regulators or even some of our more traditional banking partners receptive to new ways of doing things to satisfy the same risks.
Can you just expand on my info for those people that are dialing in outside of Singapore or Asia that may not be as familiar with it?
Yeah, it's one of the tools that the Singapore government is using to develop digital identity for the nation, and so it's sort of a digital authentication tool, such that once your details are typed in to be authenticated, let's say your personal ID number, they would send you a notification through two-factor authentication, or it might be through a notification on the actual app. So it's in a secure way that no one can try to log in and open an account as you, and that it would always be on an authenticated app or sent to your personal phone number that is actually registered with the government as well.
Thank you so much.
Perhaps I could add there, I think MyInfo is a fantastic initiative in Singapore.
Agreed.
We connected, TransferWise connected to MyInfo a couple of years ago, and as a result, we were able to reduce the cost of verification by 20%, and also reduce our contacts to our customer support centre, with customers asking how to verify themselves. So this has improved convenience and reduced costs, and this is a direct saving we can pass on to our customers. So yeah, I think MyInfo is a really great initiative, but not all countries have a national ID and a really progressive regulator. I think in terms of the regulations and technology, it's really incumbent on us to engage in that two-way conversation that Michelle was talking about. In particular on the consultation paper on identity verification in Singapore, I think that's an interesting move. I mean, the current framework today is principles-based, and this is the gold standard in terms of regulation. MAS today has set four risk pillars that they expect entities to meet, and that is, we need to be able to address the risk of the ease of unauthorized access. We need to address the risk of multiple fictitious accounts, address the risk of the absence of physical documents, and address the risk of speed of transactions. this is great. This is a risk-based approach. It focuses on what's the outcome and then allows room for fintechs and firms to innovate to address those risks. But with this consultation paper, I sort of see maybe a slight hardening in terms of the verification rules requiring entities to fulfill at least, you know, one of the solutions posed. And it is open and a flexible approach, and there is a consultation paper, but it's also a slight hardening of those rules. We'd really like to see that the rules stay principles-based, because this is the best way to allow fintechs to innovate.
Yeah, agreed. And I know TransferWise continues to do super exciting things in terms of building tools in-house to address new and emerging FinCrime typologies. Can you talk through maybe some of the ways in which that's developed this year? If there's anything new that you've been working on this year?
Yeah, there are a couple of things that we've been working on this year, namely machine learning and internal tooling. So we've been exploring more uses for machine learning, similar to, I think, perhaps what Michelle's shared, where we've got machine learning working in our AML and fraud spaces, but looking at this for how we can apply that technology in our verification area. So this is in kind of an exploratory mode at the moment. Again, helping us get to a more convenient position with our customers. Secondly, we've been looking at our internal tooling and enhancing the way that we analyse financial crime cases. And in developing that internal tooling, we've really taken a design-led approach. So looking at the system and the platform that's actually being used by our analysts, and saying, okay, what is it that they need to do? What do they need to look at, and how can we improve this and make it, you know, perhaps a faster process? So we've got this beautiful system now where there's no vertical scrolling, there's minimal horizontal scrolling, there's enhanced visuals, we've got a reduced need for multiple screens and tabs. It really is this, you know, quite lovely design. I mean, this isn't revolutionary use of technology, but for us, I think the way that we process investigations is as important as what we're actually processing. So machine learning and our internal tooling.
So when it comes to either building these systems and controls in-house or partnering with third-party vendors, there's real expertise that's required in terms of driving these decisions and these discussions. And I wanted to understand a bit more about whether some of the discussions that we're seeing around skill set shortages in this region, specifically pertaining to AML, whether you've experienced this as a reality, and if so, how you've navigated this within your respective functions in this region. Sergio, maybe we'll start with you.
Wait 1 second for that. So I think that in terms of skill set shortages, I haven't really observed that to be the case in my own experience in the Singapore context. I think that here, when it comes to hiring, we actually do find very, very good candidates. But I think that obviously in the region, I think hiring is tougher. And for us, the way we have dealt with it is really, there isn't anything particularly special about how we deal with it in financial crime hiring versus other areas. It's really about recognizing that it will take a longer time to fill the position in general. Also recognizing that your first touch is unlikely to be correct. And you need to be prepared to make certain hard decisions early on. And I also now strongly recommend the use of writing-based assessment modules during the interview process as well, including a presentation component, because I think that I really want to look into people's ability to think and communicate as a core skill, because I can actually work with that even if the specific domain knowledge is not as strong. Yeah.
Michelle, have you had any experiences in this space?
Yeah, I think there's plenty of talent in the region, but I think great people are never easy to find. And for us, I would say we'd have two strategies: is to cast the net wider. So we are scouring the globe. I have an open role right now, and we're looking all over the place for talent. Sometimes I feel like it's like X Factor, it's music auditions. Whoever's willing to come and audition for us from anywhere in the globe, please.
You'll see them.
Yes. And so the second strategy that we would have that I feel I've learned is when you're hiring for a fintech, the kinds of problems that you're likely to come across once you join are usually things that you probably never come across before. And we ourselves at Stripe have never come across before. And so I've leaned and shifted away from hiring for domain knowledge and experience, but rather making sure that people have the right foundational core material to succeed with any challenges that they might be given. As Surgeon mentioned, the critical thinking abilities, problem solving from first principles, that's what we would really be indexing on in terms of our hiring.
Yeah, I mean, sorry, Surgeon, after you.
No, I was just going to say, I really agree with Michelle. I mean, I guess the part that I would also add to that about the culture and working in a fintech is that we really need people who are comfortable with a significant amount of uncertainty, and people who are comfortable with the fact that, especially if they're coming from a very large company or a large financial institution, that they would need to become much more of a generalist than a specialist in many respects. And things that you can sort of take for granted around governance or policies, and just in general having sort of standard operating procedures, a lot of this won't exist in the fintech environment, and they have to be comfortable with that and yet somehow feel positive about it. So I think I agree with Michelle that it's not easy to find people whose temperaments are actually suited to that.
Yeah, and I think what I'd add specifically pertaining to this region in my experience is, depending on how many countries you decide to bucket within the APAC region, you're talking about 15 different markets, regulatory requirements, language, etc. And so really, you also need in-country expertise that can drive some of those nuanced discussions with regulators, where you're talking specifically about product features, unique controls that you're building, etc. So really trying to understand how you're building that country expertise that also then feeds into a regional / global program is, I think, an added challenge within this region when it comes to trying to find expertise. So yeah, definitely not an easy space to operate in, for sure. So talking about teams, how do you ensure your teams are adequately trained on new and emerging FinCrime typologies, especially when your business is rapidly scaling into new markets or you're launching new products? Genevieve, maybe we'll start with you.
I think maybe I'll hand back to you on this one, Pyle.
Sure. Michelle?
I think our team would naturally come across and experience behaviors that they would see as different once they are exposed to the data of new markets. But I might then take an opportunity to share some slides on the way we approach transaction monitoring. I really see a shift moving away from human-dependent recognition, as Genevieve had touched upon, the intelligent-based monitoring or the machine learning type of tooling that there might be. And I can share some of the work that we've been doing in this area, because I think depending on humans to recognize, detect when we have such a large amount of data coming through will become increasingly difficult. And in order to meet those needs, I think depending on sort of big data analysis is something that's very much required in the fintech. So I would just, is there time, Pyle, for me to share?
Yes, of course. Yes, always.
Sure. I will just share this quickly. So in the TM space, we typically all organizations are able to cover sort of this end of the spectrum: rules-based monitoring, manual referrals, and surveillance monitoring for us is an evolution of the rules-based monitoring. But we, in the past year, have been much more focused on developing this side of the spectrum, where it's not going to be human defined as to what the rules are in the more traditional space. So I will showcase maybe some of our intelligent monitoring in terms of what we're doing and have developed. So it's all about identifying what is the outliers in terms of behavior and being able to know what is normal. So in rules-based monitoring, you might say, oh, the outliers might be either at this or this end of the spectrum. The biggest transaction volumes are the lowest ones who have been inactive for a while, but we think it's more effective and smart to group together merchants who have similar behavior and similar expected behavior to actually identify the outliers. So, for example, UK travel companies would have a very different set of transactional behavior compared to Italian retailers or Japanese marketplaces. The transactional sizes, frequency of transactions are all very different. And so seeing within the group what is normal and what is not is something that we have been working on. Other ways that we have developed is obviously the supervised and unsupervised learning on the machine learning side, and putting together the decision trees here and allowing, rather than saying we will set what the thresholds are with the rules, would actually let the algorithms determine what should be an outlier, because if I was to pick a random number from my mind to say, well, you know what, $5,000 or $10,000 as per the regulations would be something that would be smart to follow here, definitely going to feel safe in terms of our regulatory conversations. But in terms of actually really detecting suspicious behavior, we think it's better to rely on what the data tells us. And so the decision trees could really go into many, many more decision algorithms, and we will pick the ones that are most effective after testing. And then the last part that has been exciting for us to work on is the unsupervised learning part, where let's say if you've identified the suspicious customer here in F2 space, and you want to make sure that you pick up other similar types of suspicious behavior, it's important for you to be able to detect this kind of clustering behavior to see, okay, who else out there has similar behavior that we really should be looking for. It's not necessary that these customers would have similar linkages. Actually, maybe they could be non-connected at all, but they're displaying similar types of behavior. And is that something that we should be looking for? And these clusters, again, in unsupervised learning may not be something that we would set ourselves. The groupings are decided by the data as to who exhibits similar behavior. So yeah, those are just some of the things that we've been working on.
That is super interesting. Thanks so much for sharing. Surgeon, anything to add?
Mine would be a much more pedestrian answer. So just be that I think that for financial crime supervisors, you do need to budget explicitly for compliance training on an ongoing basis. So there are, of course, many good external service providers in the market, including your sponsors, ACAMs, for example. And there will be several opportunities for ongoing skill improvement. So I think it's important to explicitly budget for that and make sure there's management buy-in for it. Having said that, right, we can't always be hoping for external service providers to solve our problems. Many of these issues around new markets, new products and services can be examined from first principles, provided you have the right people. And I think it's very important to have people who can deal with sort of dynamic changes and who aren't, say, reliant on what just an external service provider can provide. So it's definitely a combination of the two.
So in terms of continuing the theme of expanding into new markets, can you talk me through some examples of how your financial crime team are business enabling and are facilitating and work closely with the business to enable the rapid growth that your businesses are currently going through? Genevieve, maybe we'll start with you.
Sure thing. we have a really clear delineation of responsibility in terms of the expansion. Historically at TransferWise, there was a sub-team that was created out of compliance to manage our banking partners who have lots of compliance needs. And this team also obtained licenses to enter new markets, and this is known as our kind of team of bankers. Today, once the banking team has obtained a license in a market, for example, I think the latest success was a limited banking license in Australia, they hand over that responsibility to compliance. At TransferWise, the compliance officer's role is twofold. First, to maintain the license, so working with the regulator, overseeing audits, working with tribes to make sure they understand what needs to be done, and second, to improve the compliance product. So what I mean by that is identify opportunities where we can apply a strategy to get us closer to our mission to be instant, convenient, transparent, and eventually free. So this could mean like reviewing a policy or procedure to see how we could enhance it, or working with our regulators to help them understand that we could address risks that they're concerned about, but the way that we do that might look a little bit different than what's prescribed in the regulations, or work towards an innovative solution and get their buy-in on it. I think at TransferWise, each compliance team is treated as a product in and of itself. So we are actually the business too. So our borderless e-wallet is a product, our remittance is a product, but so too is verification, EDD, AML, fraud. They're all products in and of themselves. And each of those teams has a dedicated product manager and engineering team that's responsible for developing and improving the tooling that each of those teams use. So in a sense, the products and services that we have are not actually limited to what the customer sees, but all of us are aligned behind this common mission to have money without borders. So we sort of don't maybe draw this distinction between the outward products. We consider compliance to be products themselves and the business.
I actually love that. That's a really positive way in which to frame the compliance function, and one that I don't often see described in that way. So I think that's really great. So Jin, do you have anything to add?
I think the way that Genevieve framed it is very similar to how we look at it. It boils down to an internal mindset in management that yes, compliance is definitely a business enablement function as well as a protection function, right? These are sort of the two very important roles that a compliance function plays within a FinTech. So in order to really make the enablement function work, it really is about embedding us very early on in the ways that business plans for geographic or product expansion, and making sure that at every stage there's also input, and also I would say formal process over time. This took me also some time to develop myself, but really a formal process over time to make business recognize when there is a risk acceptance situation where we need to acknowledge that if we're going to do certain things, then there has to be a conscious way to either solve it using a product approach, and if it cannot be solved with a product approach, then it has to be resourced at a manual level, and if it cannot be resourced at the manual level, then you have to decide are you going to take that risk or not, and have the proper sign-offs and document it. So I think that's more or less in a nutshell how you can be both an enabler as well as someone who's still doing your job in compliance.
Yeah. Michelle?
Yeah, echo everything that was said. I think our processes are quite similar in terms of how we scope, launch, and maintain a market. I think on your question about how to become more enabling, our strategy is always to think about how we could affect the product roadmap, because I think we are, as you were talking with Genevieve, we are part of the product. We're just a bit more of it's a more regulated part of the product. So if other competitors are subject to the same requirements, how can we make sure we are ahead of the curve in providing the best experience for our users, as well as where are the opportunities within the regulations such that we can solve some pain points for our users? And so how Stripe has tackled it, I think there's a couple of products that we have which are kind of risk mitigation orientated again, or solving compliance related or legal type problems. So one that we have is Radar. It helps merchants detect and prevent fraud themselves and set the thresholds for which will help them determine what is their level of risk appetite so that they don't experience losses. Another one that we have identified in terms of how we think about, okay, what are the legal and compliance problems that users are experiencing within the market and how do we solve for it, is like Atlas. Setting up a company, an incorporation in a market can be very difficult. And we have thought about that difficulty and then solve that for our users through this product called Atlas, where you can get incorporated in the US quite easily. So I think there's plenty of product opportunities. And if you have a business partner in the region who is willing to explore those with you, there's a lot that can be achieved together.
Yeah, that's super interesting. I was having a conversation with these are the sorts of geeky conversations that I have in my spare time about sort of, you know, compliance and being business enabling. And the way it was described to me is, you know, the role of a compliance function is not just to look at regulations, obviously, but to really understand the essence of the risk that the regulation is trying to address, and really thinking how that applies to your business model and thinking through those solutions in a practical and pragmatic way, also being conscious of customer and user experience, cost, resource, etc. So I think it does provide us all that work in this space with a really exciting opportunity to be an integral part of these businesses, which is great. Do you see different financial crime typologies in the various markets within the region? So in the different countries in which you operate, do you see different FinCrime typologies? And how do you navigate, building the FinCrime program within this region to address that? Sergio, maybe we'll start with you.
So for this question, I find that personally the FinCrime only varies by volume primarily across the region.
Okay.
It doesn't really vary by typology that much. There is a sort of a similar style of an ATO or account takeover attack, or sort of a card fraud ring or things like that. There seems to be very similar, and I think they could really be similar gangs, really. So all I see is that certain countries have higher or lesser volumes of it, but I don't think it changes our approach that much. I think we all learn from them as well, and I think they also learn very fast. So I just take it that, you know, things always go quiet for a while when it comes to fighting for fraud and FinCrime, and then suddenly it explodes, right? And then after that, people will figure it out, and then sort of the people go away from that, and they start figuring it out again, and then they attack again. So they'll find a new front all the time. So for us, it's really just an ongoing game of continuous improvement, but realizing that you're just going to keep experiencing surprises, because the people who are involved in this are very, very intelligent indeed.
Yeah, I agree completely. I'm always at pains to talk about controls in the financial crime space being an iterative exercise, that you should always have an agile enough program where you can flag any anomalous activity, new and emerging threats, and be in a position to think through, do you have the right controls in place now? Do you need to think about changing thresholds or putting in new controls? Michelle, what about you?
I think we do see patterns that differ across the region, just because our business is so diverse and runs across so many different industries. So to give maybe a few examples, there's been a lot of attention paid to, you know, potential child exploitation, you know, that AUSTRAC in Australia is really looking into, and we do sometimes see those corridors happening with the emerging markets, you know, what, for example, with Philippines, etc. And then we do experience higher volumes of potential organized crime and industrial fraud coming from, North Asia, particularly China, as well as Vietnam. I think it really depends on where is the talent for bad actors, right? Have they has fraud or money laundering really become a much bigger industry within their countries, and so those have been particularly profitable for countries such as China or Vietnam, but they're not the only ones, right? Those would be sometimes talking to stereotypes, the most obvious trends, but it's not just restricted to those countries. And especially once it becomes online, if there are no barriers to those bad actors being able to open accounts in other markets, you'll find yourself not having any of those borders restrictions, because if they can somehow hack into or open an account in the US, then the regional differences no longer really apply.
And Genevieve, do you see any differences in the FinCrime typologies here in Asia versus, say, Europe and the US?
I think particularly now, the media's been reporting on different typologies as a result of COVID-19. So in the US, for example, there was a major case earlier this year when the government set up a loan program for small businesses. Now, through this program, you would get a lump sum payment of between $100,000 and $200,000 to support your small business and, of course, your employees. However, some enterprising individuals virtually overnight registered themselves as sole traders and applied for loans, and they got them. There were no checks on the government side of the validity of those sole traders, and the payments were made. And this led to about 175 million US being defrauded from US government coffers. So that would be one main difference. I think there's definitely been a change in payment patterns, but not necessarily typologies around APAC because of COVID. So, for example, in Hong Kong and Australia, I think we saw a number of customers accessed legitimate support payments. In Australia, we've had reports from banks that there's been a shift in organised crime because of COVID. They've been stockpiling cash, investing in gold bullion, and also purchasing cryptocurrency. And in general, I think there's been no other sort of new typologies, but perhaps an increase of existing ones like fraud, where there's vulnerable people, whether those are elderly or Michelle touched on online child exploitation, have been exacerbated. We understand from some of the banks in Australia.
Well, we've had quite a few questions come through, so I want to allow some time for that. So I will ask my last question, which is, what do you see as being the key challenges in 2021? So from a FinCrime perspective, what will be keeping you up at night? Surgeon, let's start with
you. I think from a FinCrime perspective, it would be, as we move into enabling much more, I would say, online acceptance and perhaps increasing the range of products that we offer for people who are going online, we would expect to deal a lot more with the online sort of crime typologies for that. It will also follow with, for example, if there's any increase in the limits that our e-wallets are allowed to have in various countries, then we would also expect to see, with that increase in limit, increasing creativity in the nature of the typologies that will be attempted.
Michelle, same question.
For me, it'll probably be external risks coming and threats. It will be, new regulations coming. There's a lot more FinTech/payment processor requirements coming in 2021 for us in various markets, whether it's India, Malaysia, and I think there's going to be a lot of countries that have watched the PSA go out in Singapore, and we'll be seeing, what is their strategy in respect to FinTech regulations. and probably geopolitical risks,
Yes.
such as those in Hong Kong.
Genevieve?
Sure. I think there's maybe three areas. In terms of our operations, I think one of the challenges will be how we expand to support language. Unlike Europe, where you can kind of manage multiple language or, passport or license, and support that through kind of centralized compliance operations. I think in Asia, you need to think about how to cover a broad range of languages in a decentralized model, either because of local regulatory expectations to have boots on the ground, or local processes that require more kind of paper or sort of manual support, like company chops, etc., or the ability to find talent, which we were talking about before. Second, I'd say in terms of regulations, the challenge there is working with our regulators to help them understand our mission and what we're trying to achieve to be instant, convenient, transparent, and eventually free. And by that, I mean, for example, in Malaysia, working with BNM to support allowing business eKYC. We're very keen and hope this regulation will come out soon, particularly in a COVID world where it's really sort of difficult for businesses to access services face to face because of restricted movement. I think this is very much a needed regulation. And of course, we welcome the enhancement so that these businesses can access fair and transparent services. Surgeon mentioned the opportunity in Singapore to work with MAS to look at their caps that are currently on borderless accounts. So we're hoping to continue to look at that and see how we can make our Singapore borderless accounts more convenient for our customers. And perhaps finally, in terms of financial crime, I think the biggest challenge is deepening partnerships with our friends in the law enforcement and intelligence communities. So, FATF in its paper on digital identity and in March recognised that digital payments are growing. 60% of the world's payments are going to be through these channels by 2022. We are sort of a force to be reckoned with, I think. Therefore, there's a real clear need for FIUs, law enforcement, and the intelligence community to really prioritise engagement with FinTech and work together on some smarter intelligence sharing initiatives.
Great. Well, I am going to pick some questions that we've had sent through. So the first one, other than continuous transaction monitoring, have any of you put in place continuous monitoring of other data sets to increase risk coverage? So for example, continuous adverse media monitoring, etc. If yes, what lessons and advice do you have, if any, on these efforts? Surgeon, to you.
This is the area that we are still working or evaluating with vendors. It's actually very difficult to do this on your own because you don't have access to the data sets. So this will definitely be a vendor-driven solution. But it has to be also risk-based in the sense that you have to figure out what kind of product you have and whether or not this is really worth your while for the amount of, say, the limits, for example, that are applicable to your account, whether such continuous monitoring is in fact useful, right? Or whether the threat of a sort of unknown sanction risk, for example, or unknown adverse media hit, is that something worth even following up on if you're not a bank account? So I think these are some quite important questions, but we're evaluating these solutions even so, because if we can find a cost-effective way to do it, then surely we would do it. Yeah.
Great. Michelle?
I think you can start doing intelligent monitoring on adverse media once you've really honed the matching sort of logic, right? First, you want to make sure the adverse media is on your correct users. And once maybe it's been identified to be somebody who, a pet is of high risk or is a public figure, then maybe you can apply the intelligent monitoring. But to do broad-based intelligent monitoring of like any adverse media out there, I think would be casting the net too wide. And so we're still very much focused on making sure we're matching accurately through adverse media, like who are our customers which have adverse media in the first place.
And Genevieve?
Sure. I mean, we have in place behavioural monitoring. The moment someone touches our platform, right through with each and every transaction, it's not necessarily looking specifically at their transaction, but behaviours around that. So I think having processes like this in place is quite important in terms of adverse media monitoring. If you can share a good vendor, I'd love to know. I've never seen one yet. I think Michelle kind of hit the nail on the head, sharing that having targeted monitoring is useful, but having something for the sake of it, and auditors love to put this in their reports, could be a lower value, and our efforts are sort of better spent focusing where risk is higher.
So if there are any reg techs that have dialed in, or any entrepreneurs that want to solve this issue, you have 3 amazing companies here that that would love this. So there you go. And I think we have time for one last question. So which area of compliance do you think will see the biggest technology improvements or benefits for 2021? Michelle, so we start with you.
I think this is a tricky one, actually. I think because there's the biggest demand, probably the eKYC space. But I'm actually a bit more traditional in that I'm really excited to see that the US regulator has issued guidelines to say that beneficial ownership no longer needs to be collected and conducted by FIs, and that needs to be moving to companies. So I think actually the things that we could make the biggest strides on is continuing those conversations on, like, in this digital world, does it still make sense for FIs, banks, or FinTechs to be taking on this role to enforce compliance when there could be a more direct relationship between the companies and the regulators themselves, and digitalization that way in terms of collecting UBO information. Yeah. So Jen?
Actually, I wanted to ask Michelle a question on that point, because I didn't fully understand what the US regulator issued. Are they saying that you don't need to collect information on beneficial ownership of a company because that obligation will somehow be fulfilled by a direct relationship between the US regulator and the company? What exactly has changed?
Yeah, correct. So it's exactly what you said. They have said that in the US going forward, companies will be required to provide their UBO information directly to FinCEN to mitigate the risk of shell companies and hidden beneficial owners, etc., rather than us being the middlemen to collect that. Yeah. Okay, got it. Yeah, you're right. So obviously a progressive rule change will have a much bigger impact on on how we would deal with sort of FinCrime management in 2021. So I would certainly echo Michelle's point. I'm not as hopeful something like that happens in Southeast Asia though. But I foresee that there can be interesting developments, I think, in the transaction monitoring space, in terms of the use of including the rules that Stripe was talking about just now around machine learning and AI. I think it's quite exciting to rely more extensively on these tools, but there will still need to be that transition period where you can't cut over completely, and you need a fair amount of explainability in your models in order for regulators to get comfortable. So I think that that's going to be a very interesting one, because I think that's the one which delivers a lot of value for FinCrime detection. And yet also, if you do it well, it also delivers a lot of cost savings from a staffing and system standpoint. Yep.
Do you have anything to add, Genevieve, before we wrap up?
Only to reiterate my earlier point, I'm hopeful that there'll be more of a direct connection between FinTech and the law enforcement and intelligence community and exploring what technology solutions we can have to be a bit smarter.
Well, thank you all for your time and sharing all your expertise. I learned so much through this conversation, and looking at all the questions that came through, our audience found this time invaluable. So thank you so much. Over to you, JP.
Yes, thank you, Pyle. Thank you, Michelle, Genevieve and Sergeant, for sharing your practical experiences and all your time today, in addition to all the time in preparing for this session. So thank you for joining us, and we hope to see you at the next session or later on in the week. If not, I wish you all a very Merry Christmas.